Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip studies the U.S. Treasury yield curve. Yields on the 2-year and 5-year bottomed on March 17th at 1.268 and 2.163. On Friday, these yields tested 2.504 and 3.251. I expect Friday's high yields to anchor the U.S. Treasury coupon curve right through Wednesday's rate decision by the FOMC, when the federal funds rate will likely to be cut to 2%. Yields on the 10-year and 30-year bottomed on January 23 at 3.283 and 4.099. On Friday, these yields tested 3.916, and the 30-year is testing its 200-day simple moving average at 4.628 this morning. The 30-year minus 2-year spread was wider than 300 basis points and ended last week at 217. With the lower Fed funds rate and new supply of 10-year and 30-year maturities next week, I would not be surprised by some re-steepening of the coupon curve, with the 10-year going to 4% and the 30-year going to 4.75%. The weekly chart for the 30-year shows risk to the 200-day simple moving average at 4.757. My second blip shows the daily charts for COMEX gold, NYMEX crude oil, and the euro. Gold held my quarterly support at 879.5, but strength should stall at or below the 50-day simple moving average at 941.8. If support breaks, the risk is to the 200-day simple moving average at 818.3. Crude oil reached another new all-time high overnight at 119.93, then returned to my new weekly pivot at 118.87. Without a breakout, the downside risk is to my monthly support at 106.80. The euro peaked just above 160 last week, but weakness stayed above the 50-day simple moving average at 1.5519. My quarterly pivot at 1.5877 has been a magnet, and this week's resistance is 1.6103. My third blip looks at the monthly, weekly, and daily charts for the Dow Industrial Average. The monthly chart for the Dow shows a declining 12 by 3 by 3 monthly slow stochastic reading. A close on Wednesday below the 5-month modified moving average at 12,847 keeps the monthly chart negative. The weekly chart for the Dow is positive with rising 12 by 3 by 3 weekly slow stochastic reading. A close this Friday above the 5-week modified moving average at 12,535 keeps the weekly chart positive. The daily chart for the Dow will likely be overbought just as the FOMC meeting ends on Wednesday. I saw a neutral zone between my annual pivot at 12,670 and my semi-annual pivot at 13,049. With the tax rebate checks in the hands of consumers and with the potential last rate cut made, the Dow needs to close above the 200-day simple moving average at 13,074. Otherwise, it could be sell in May. My fourth blip shows the daily chart for the regional banking index, BKX. Wall Street is telling investors to buy community and regional banks despite another quarter of mostly earnings misses and increases in reserves for losses. Meanwhile, the Beige Book tells us that financial institutions in many districts indicate deceleration in consumer loan demand, tightening in lending standards, and deterioration in asset quality. The regional banking index, BKX, ended last week above its 50-day simple moving average at 81.97. Send your comments and questions to support at rightsideadvisors.com. That's today's 4 in 4. Enjoy your day.